Most investors chase the next big thing, fast-growing stocks that promise quick riches. But here's the surprising truth. A simple, steady 5% dividend return can quietly outperform risky growth strategies in the long run. Today, we'll reveal why dividend stocks are the hidden engine of wealth. Before we dive in, make sure to hit subscribe and turn on the bell so you never miss strategies that could change your financial future. Let's start with the basics. Dividends are simply companies sharing their profits with shareholders. When a company makes money, they can choose to share some of it with you. Think of it as your reward for being a part owner of the business. Imagine owning a $100 stock that pays you $5 every year. That's a 5% return, even if the stock price doesn't move. This creates a predictable income stream that builds wealth over time. The company literally pays you to own their stock. It's like getting paid while you sleep. Most dividend companies pay every 3 months, like clockwork. Many companies even increase their dividends annually. This is where the magic really happens. Most people think investing is about buying low and selling high. But dividend investing is about buying and collecting. You're not gambling on price movements. You're collecting your share of real business profits. This creates a foundation for something even more powerful. The true wealth comes from what you do with those dividend payments. Instead of spending your dividends, what if you reinvested them? That's where our snowball story begins. Let me show you how this simple strategy becomes a wealth-building machine. The numbers might surprise you. Let me show you how this simple strategy becomes a wealth-building machine. That $5 dividend doesn't just sit there. If you reinvest it, you're buying more shares of the same company. Next year, your dividends pay you even more. Over time, it grows like a snowball rolling downhill, bigger and faster. What started small becomes unstoppable. Let's see this in action. Year 1, you reinvest that $5 dividend. Year 2, your dividend is now $5.25 instead of $5. Each year, the growth accelerates. After 10 years, that original $100 investment has become a wealth-generating machine. Your annual dividends alone could exceed your original investment. This is why Einstein called compound interest the eighth wonder of the world. Now imagine this effect across multiple dividend stocks. Different companies pay at different times, creating a steady stream of income. Most brokers can automate this reinvestment for you. The beauty is in starting small and staying consistent. Patience becomes your greatest asset. The growth becomes exponential, not linear. Your money starts making money on the money it made. Eventually, your dividend income could replace your salary. This is how you build true financial security and even build generational wealth. Let's compare these two investment strategies. On one side, you have the excitement of chasing growth stocks. On the other hand, the quiet reliability of dividend stocks. While hype stocks crash and recover, dividend stocks quietly keep paying you. Even during recessions, many dividend companies maintain their payments. You can sleep well knowing your income continues. No more emotional decisions based on daily price swings. Growth stocks can deliver spectacular gains, but they can also lose 50% or more overnight. Meanwhile, dividend stocks show steady, reliable growth. Over 20-30 years, the tortoise often beats the hare. It comes down to risk tolerance. Growth stocks can go to zero if the company fails. Dividend stocks are typically established, profitable companies. Even in bad times, they might cut dividends but rarely disappear entirely. Growth investing requires perfect timing. Dividend investing requires patience. One feeds on fear and greed, the other on discipline and time. Which strategy can you maintain for decades? Real wealth isn't built on luck or timing, it's built on proven business fundamentals. Let's look at some real examples. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble. These are called dividend aristocrats. These companies have paid dividends for decades through recessions, crashes, and even wars. Their track record speaks for itself. These companies sell products people need, not just want. They operate worldwide, reducing dependence on any single market. They maintain strong balance sheets and conservative debt levels. Coca-Cola has increased its dividend for over 50 consecutive years. Johnson & Johnson hasn't missed a payment in over 80 years. Procter & Gamble has paid dividends for over 130 years. As a group, dividend aristocrats often outperform the overall market. Their business models generate predictable cash flow. Management teams are committed to rewarding shareholders. They have competitive moats that protect their market position. Their dividends are sustainable because they're backed by real profits. These aren't speculative bets. They're market leaders, with proven track records spanning generations. That's why institutional investors and pension funds love them. Dividends may not sound flashy, but they're the quiet engine of true wealth. By reinvesting your dividends, you're not just earning, you're compounding. That's how fortunes are built. Comment below. Do you prefer chasing fast growth or building wealth slowly with dividends? And don't forget to subscribe for more strategies that make your money work for you. In a world obsessed with instant gratification, patience becomes your superpower. The magic isn't in the dividends themselves, it's in what happens when you reinvest them consistently. This is your pathway to financial independence, not through luck or timing, but through proven principles. Start small, stay consistent, and let compound interest do the heavy lifting. Your future self will thank you.